Yeah, Tanvir. So, we launched a new product today morning called Trend Spotting and Asia Macro Charts. What we saw is that the trade numbers for the month of February and March have shown an uptick. And from the Korea high-frequency data points for the first 10 days of April, that momentum of recovery seems to have continued. So essentially what it appears is that the worst of trade slowdown that Asia was facing is now behind us. Having said that, we are also highlighting that, look, the recovery will not be V-shaped like it used to be in the previous cycles because we still have to deal with the slowdown in domestic demand in US and Europe. But at the same time, to the extent to which China is coming back, net-net, things should still be looking up better for Asia's exports.
Right, and particularly, do you think China would stand out in light of that? Did you sense that what we saw with the export numbers that came out last week, that there's a trend in the making?
Yeah, that's right. So when we look at the end demand in the world and we look at real imports, it's really coming back up much nicely in China, whereas in the US it's holding up at high level but not really rising at the margin. And Europe, it's also kind of holding up at the high levels. But it's really China which is driving the end demand in the global economy at the margin.
But in terms of, I suppose, expectations, because obviously everyone is looking at China and, a sustainable growth outlook for the most part following on from the COVID lockdowns. But when you take a look, I suppose, at other economies, and you flagged this a little bit before when you were talking about the end demand in Europe and the end demand in the US, but how concerned are you about the fact that it's also manufacturing that's rolling over everywhere else? And I know that, China's strength is its manufacturing base, but when you see that the weakness is starting to crack in there, doesn't it bode even worse for, the end of this year and into next year without some more substantive or without continued fiscal support coming through from China?
Sorry, you're talking about China, implications for China or for the rest of the region?
Yeah, in a sense, because of how those other markets operate. If you're seeing that the weakness coming through for their manufacturing sector, that's obviously then going to feed through to an even worse demand outlook if you're talking about new orders and the like. So in so much as China can be on a recovery path, and in so much as you can see this growth coming through, but are we underscoring or underselling, I believe, I should say rather, the impact we could see in Europe and the US vis-a-vis what that then means for China?
No, not necessarily. So look, I think we started with the export story, but really the big argument that we've been making for some time for Asia, including Japan, to outperform versus US and Europe is the fact that there is domestic demand strength. So China is one, and it's going through a rebound quite nicely because of reopening, but also because of fiscal and monetary policy being supportive. And at the same time, we are seeing other three large economies, which is India, Indonesia, and Japan, having country-specific factors driving their domestic demand. So when you take the whole region story together, we're expecting a region's growth to outperform by about 500 basis points by the end of this year, which is essentially in the fourth quarter of this year.